Hello everybody, so this video is entitled Hims Fighting the FUD, not my first rodeo. As you know, I've been in this stock for quite a long time, actually, since the channel started, essentially. So Hims a case of the price making the narrative. When we were hitting 70 and we got close to 70 like a bunch of time last year, like 1, 2, 3, 4, 5, lots of people not day trading, but like weekly trading the stock, playing the options game. We had a great 2025 for the traders. The problem is that it attracted traders, and then there's a bunch of FUD being spread always about Hims. It's very annoying. So this video is about addressing that FUD. First of all, at $30, I'm still very happy. At $30, we've been following this stock for a long while. So at $30, still way up. But it's true that 2025 has been a dead year because of all of this trading and all of this sentiment on retail X. A lot of people disagreeing, a lot of people not understanding the fundamental thesis of this company, a lot of people not even acknowledging how cheap the company is. So before I go through 5 specific pieces of FUD that I'm going to try to debunk, let me just talk about the valuation. The stock is dirt cheap, and it's pretty obvious to me. So this was from the call, right? The Q3 call. We don't have a Q4 call yet, but we had guidance. So what do they expect? They expect for full year 2025, so when they will report Q1, right, upcoming, when they will report, they will be having, let's call it 2.34 billion of revenue for a full year 2025, and let's call it 312 million EBITDA for that same year. So FY 2025, let's call it 2.3 billion in revenue, 300 plus million in EBITDA, market cap is 6.89. So what are we trading at trailing 12 months basis? We're trading at 2.9 times revenue and 22 times adjusted EBITDA. We are trading like the company has no growth. We're trading super low. There's a bunch of established companies with declining revenues who trade much higher than that. So the stock is dirt cheap. And it's dirt cheap on the basis, like at face value, it is dirt cheap. At face value, right? You have a cash flow yield of about 5%, assuming no growth, right? Essentially. That's essentially what you get here with this EBITDA and this market cap. So that's point number 1. But the problem is that we have growth. This is a high growth company, and we have guidance. I love companies that give guidance. We have guidance. Full year 2030, they guided for 6.5 billion in revenue for the full year 2030. So that guide, okay, what is that guide? Assuming you calculate the average return of the guide, right? So what is the CAGR? So the CAGR is, for the next 5 years, we're expecting nearly 23% growth in revenue every year for the next 5 years, okay? And what else do we know about Hims? We know that they have a major history of lowballing us. A major history. Do you remember 2024? Do you remember what their guidance for 26 was? And how they blew past that like a year and a half early. We have a history of them under-promising their long-term guidance and reaching it way sooner. So if it's 6.5 billion, what if it is reached in 2028? Right? Because that's what they did one time, they could do it again. So the growth rate over the long run could be closer to 35 to 40% in revenue growth. And we have all of the new products we're launching. We have all of the products we're remote to launch for the Super Bowl coming up soon here. I think it's reasonable to assume they're going to grow faster than that. But of course, your opinion on the stock is going to be based on what you think the growth is. But the truth is, even if there's no growth, you're still paying 22x EBITDA. That's still a cash flow yield of about 5%. So that's still excellent if you ask me. But of course, this company has a lot of growth. So let's talk about FUD. FUD number 1 is growth will stall. That's what a lot of people are saying. And why are they saying that? Because they're saying GLP-1s being sold on Groupons, being sold on weird websites, and everybody's like selling. Frankly, if I was a customer of GLP-1, I have no idea which company I would choose. How would I choose in a sea of companies who sell GLP-1s and who all try to claim that they're ultra legitimate. I would probably go with Hims, because Hims is the most famous company out there that does GLP-1s. There's so many brands of GLP-1s. Who would you choose? Who would you choose? So many websites all over the place who sell this stuff. The competition is absolutely intense. And so people are saying, well, growth will stall because they will sell less GLP-1s because of the competition. Well, remember the last video where I estimated, like, at the max, next year we're going to have 25% of our revenues come from GLPs. At the maximum. This is like the max. I think it's going to be less than that. Don't forget that Hims sells weight loss products that are not GLP-1s, like metformin-based pills, which also work pretty good for weight loss. Don't forget that they also sell liraglutide. Liraglutide is the off-patent GLP-1. It's the GLP-1 anybody can sell. They sell that at Hims. Right? So compounding is not going away. Another piece of FUD. People think, oh, compounding is going away. No, it's not going away. Compounding is a well-established practice. It's been around for the longest time. And Hims is compounding just about every single of their drug now. They customize them to the customer. That's what they do. Okay? And then lastly, people say, oh, they're going to disappoint on growth. Have we forgotten about Q3? So Q3, I remember Q3, the stock dropped after Q3. Q3 was widely predicted to be a disaster. I expected Q2 to Q3 to be flat. And you may remember this video. In Q3, the revenue not only exceeded Q2. Q2 was the disaster quarter where Novo ended the partnership to sell semaglutide. The partnership ended. The commercial partnership ended. So in Q3, we thought the aftermath of the end of the Novo partnership would linger. We thought it would continue for Q3. It did not. So not only did they grow revenue from Q2 to Q3, but they also exceeded the number of Q1. So the growth just sprung back up, if you remember Q3. So I don't understand where this comes from, that the growth is going to stall. I really don't buy it. And if it did stall a little bit, so what? I mean, I'm not a trader. I think most people who fundamentally understand the Hims story are not traders. If you're in this stock for a trade, this probably is not the stock for you. Hims is a deep disruptor of the healthcare system. It is akin to a Netflix of healthcare. It is turning traditional healthcare into a subscription business model. It is making healthcare, as we've had it so far, obsolete. It is justly treating the current way we do healthcare as sick care and inventing a new form of care, which is healthcare. And I know that sounds out there, but I have a lot of thesis on this. Look at all of my prior videos where I explain to you the issues in traditional healthcare, the issues with ping pong, the issues with going from doctor to doctor. It's a much bigger story than just selling ED pills or just selling weight loss pills, right? The way they integrate the labs is absolutely outstanding. So anyways, growth will stall. To me, the evidence is not there to suggest that. Traders will trade around that number. They're focused on GLP-1s. They're focused on this. This reminds me very much of Tesla when people focus on the cars and selling the cars. Well, people look at Hims, they focus on GLPs, and all they talk about is GLP, forgetting that this company is a much bigger picture, has a much bigger vision. Okay, FUD number one. You got my opinion on that. FUD number two, they spend too much on marketing. So I was very annoyed to see a very misleading tweet. You may have seen it all over X. And I can't find it, so I don't have a screenshot, unfortunately. But the tweet was something like, oh, they spend $1 billion in marketing to generate $2.3 billion in sales. Oh, they're very, very bad. And I say to that, okay, 20th century Wall Street normie. That's what I say to that. It's like, people are still stuck in the idea that to sell a Lexus, so if you sell a Lexus, you gotta spend between $7,000 and $8,000 of advertising in magazines and airports. And so, of course, a Lexus, a $50,000 Lexus, that's not a recurring sale. That's a one-time sale, and then people own the car and they don't necessarily come back. That's not a recurring sale, or at least a tough argument to make. So you see, in the industrial era, and that's of course the era much of Wall Street is still stuck in. They still don't understand disruption. In most of the early era, marketing was a cost. Lexus could not sell an overpriced car without spending $7,000 per car to make people feel good about driving a Lexus. Right? And they created the brand like that, right? So it was often considered an expense. Is marketing an expense? Ask yourself this from a first principle basis. Marketing, in my view, is absolutely not an expense, especially when you deal with a modern company who's obsessed with the lifetime value of the customer. Amazon taught us that. Amazon was a victim of big FUD in the early days because of how much they were spending on customer acquisition. When you spend a bunch of money, let's say $1 billion to generate $2.34 billion in sales, you're not generating $1 billion for a one-time sale. You're spending $1 billion to have a customer which hopefully will stay with the company for years and years and years. We've heard Yemi on the call say many of the original ED subscribers when the company got started are still subscribers today. You are recruiting a customer for the very, very long run, perhaps their entire lifetime. You start with HIMS maybe for hair loss, and when you're in your 60s, 30 years later, maybe you have 3 or 4 HIMS subscription for different things, right? Same for Netflix. Once people are hooked on Netflix, they stay for a very long run. So Netflix can spend a lot of money on customer acquisition. Banks can spend a lot of money on customer acquisition. This is not a one-time expand in airport ads to sell Lexus, right? We have moved Wall Street. We're not in this industrial world anymore. Customers are recurring. We care about the lifetime value of the customer. It makes a lot of sense to recruit a customer for the long run. And by the way, and I'm going to go out on a limb here and say, because this is something I've done in real life, right? Ask random people, especially, right? Everybody in the US, I mean, this is a bold statement, but this is true in my view. Everybody's heard of HIMS. Ask a stranger if they've heard of HIMS. They've heard of HIMS. HIMS is everywhere. And hers is becoming that way too. But HIMS is everywhere. It's on CNBC radio. It's on CNBC TV. It's in magazines. It's in print. It's on any random sports channel. Like sports channels are invaded with HIMS ads, right? For hers, they do a lot of like TV series. They advertise a lot on TV series and TV platforms. HIMS is everywhere. Is absolutely everywhere. I don't think I'm going too far when I say that everybody's heard of HIMS, right? Just like SoFi, everybody's heard of SoFi because they spend a lot too on SoFi on marketing. So HIMS. So I don't know what to say. I think that marketing is really, really working for HIMS, and they are known and recognized as a brand. You may even know that they partnered with a lot of retail stores. They have an entire line. This is what I put here in my entry thing here. They have an entire line of products that they designed exclusively to be in retail, right? Exclusively, like shampoos and stuff, exclusively to be in retail. And they say, we're not making money on this. We're actually having it in shelf space at retailers because we want people to see us at a CVS or whatever and see us as like a legitimate brand. I think the branding and the marketing of HIMS is an investment. And they're reinventing healthcare. And so they're investing in their brand and they're widely known. And because they are so widely known, if you need a drug, you're more likely to trust the company that is widely known. So no, that is not a bad thing to spend in marketing and investment. In my in my view, marketing is a good thing. Marketing is an investment. Sorry, I got my words twisted here. Anyways, FUD number 3. Insiders are selling. This is the classic FUD that is always used against every stock out there. Frankly, complaining about insiders selling, in my view, I have to think this is an engagement tactic on X. Because, of course, when you post something negative on social media, you're much more likely to get the clicks. So if you want to grow your social media on X, like so many people are trying to do, if you want to be popular on social media, well, you got to post something negative. And how about posting something negative about the one of the most popular retail stocks? You post something negative about one of the most popular retail stocks, your tweet is going to have much more engagement. So that's engagement farming, because insiders are selling. I can take any stock and write that about any stock and complain that insiders are selling. It's just noise. Of course, insiders are selling. In fact, most insiders have plans where they regularly sell stock for their living expenses. A stock sale, I'm sorry to say, a stock sale is not a signal. If you study stocks long enough, you will find that the only signal is a buy. A buy is a signal, right? If they're not buying, that doesn't mean that it's a signal. But that doesn't mean that it's a bad thing that they're not buying. It just means they're not buying, right? So selling is not a signal. Why is selling not a signal? Because CEOs, insiders sell for dozens of reasons. A big one is tax. A big reason is tax. Kids' college tuition. These things can be very expensive, especially in San Francisco. That's another big reason. Charity. That's another big reason. Opening a family office. Your advisors oftentimes, when you're a CEO, tell you, okay, you got to open a family office and fund this. There's a bunch of reasons as to why somebody would sell, and I suppose maybe in some cases they sell because they don't believe in the company. But first of all, it can be a pre-programmed sell. So what you see is whenever they walk through the list, it's a pre-programmed sell. So it's uninformative. But even if they were to actively sell the shares, that's not a signal. They could do something else. There could be so many reasons as to why insider sells. There are so many reasons as to why insider sells. You're taking a big risk. You're interpreting in that case. A buy signal is much clearer. A buy signal means you like the stock. But otherwise, selling, frankly, I never read signal in this. So, FUD number 3 addressed. FUD number 4. Amazon will kill them. Amazon killed the grocery store, right? There's no more grocery stores. Amazon killed them. Amazon killed the iPhone. Amazon killed Android, right? Entirely, because everybody has a Fire phone, the Amazon Fire phone. Amazon was coming for Apple, and Apple's dead. That was the FUD back when the Fire phone came out in 2014, if you remember that. Kroger stock dropped a lot in 2018 when Amazon bought Whole Foods, and everybody thought Amazon was going to disrupt the local grocery store for fresh foods. Maybe it will. Jury's still out on that one. But the point is, Amazon has been trying to get into pharmacy for a long time. Yes, Amazon will disrupt pharmacy a little bit, I believe. But it's a fundamental misunderstanding of HIMSS to think that HIMSS is going to be disrupted by Amazon, in my view. Because HIMSS is not a pharmacy. HIMSS is much bigger than the pharmacy. Why is it much bigger than the pharmacy? Because it combines the doctor and the drug. You cannot go on HIMSS and just buy the drug and not buy their doctor. The doctor and the drug is combined all in one offering. Okay? The visit with the medical practitioner, the follow-ups, and the drug are all included in one unique bundle. There is no name to enter with your local family doctor to send them to send the prescription to HIMSS. You're not going to send a prescription to HIMSS to get prescribed, ED gummies or whatever. That's not how HIMSS works. HIMSS sells you a combination of care and pharmacy together, and they both work for you. Okay? In the traditional system, you cannot do that. In the traditional system, both the pharmacy and the doctor work for the insurance company, and they're both gatekeepers of the funds of the insurance company. The doctor will not prescribe you something because they think the insurance won't cover it. The pharmacy may swap your prescription because they think your insurance won't cover it. It's important to realize in healthcare who works for who. The doctor works for the health insurance company, and so does the pharmacy. And there's a lot of things in traditional healthcare that are not compatible with modern day business. One of these things, for example, is lack of transparency in pricing. The prices at the pharmacy or the prices of doctor visits in the US are absolutely not transparent. Most of the time, you end up knowing the final cost after you've consumed the visit. After you've gone to the visit, you know the final cost. Most of the times, the secretaries can't even figure out the cost of a doctor visit, and they're like, "Oh yeah, if you owe anything, you get a letter in the mail." And then you get a letter in the mail 4 weeks later because you gotta pay an extra $30, right? And better not forget that letter, because if you forget that letter, you're gonna have medical debt, and then your credit score is gonna tank because you missed the letter to pay the extra because they weren't able to even calculate how much it would cost you for that doctor visit. The same for drugs. Try to know the price of a drug before the fact. It's next to impossible. So it's disrupting a non-transparent system. This is why I think Amazon Pharmacy is going to disrupt a lot of traditional healthcare, but it's not creating something new. HIMSS is creating something new. It's creating a world. It's a blue ocean strategy. It's a 0-to-1 move. It's creating a form of healthcare that relies on zero insurance. There is no insurance at all at HIMSS. You don't use insurance. And because you don't use insurance, you can innovate the way you want. Your doctors can prescribe what they want. You can use AI extensively to help the doctor prescribe. Okay? You can make your custom pharmacies, your custom drug, your compounded drug, your fancy drugs that the insurance would typically tell you no for. Now you don't have to worry about that. You can just make it and innovate because you know all of your customers are cash pay. You don't have to fight for reimbursement from the insurance company, which medical clinics, medical practices sometimes have up to 40% of their revenue coming from insurance in jeopardy because insurance companies delay, right? They do everything they can to not pay. Amazon's going to have to deal with that on the back end. They're going to have to deal on how to get the payment from the insurance company. HIMSS doesn't have to deal with that. And perhaps the biggest deal is because you don't have to deal with that, because you don't deal with insurance, because you have your own doctors and your own pharmacy bundled together. The doctors work for the patient. The doctors don't work for insurance companies. But especially, you can move very, very fast as a corporation. It's very tough to innovate in healthcare when the velocity of money in healthcare is 6 to 8 weeks to get a reimbursement. How can you be innovative when the time you get the revenue from the insurance company is 6 to 8 weeks? How can you move fast? You can't move fast. HIMSS is a tech company. It is a tech company aimed at disrupting healthcare. And then you have customization, and then you have labs that are coming, and then we're getting into longevity, right? Longevity not recognized as a valid practice for some reason by the traditional medical field. The traditional medical field is just starting to recognize that maybe pills can be used to lose weight, right? You go about weight loss 5 years ago, weight loss, they would tell you, oh, you got to eat better and exercise. That's what they would tell you. Now they're finally realizing, oh, well, wait a minute. We have this drug that we know people live longer and we know people lose weight. Oh, it's called metformin. Oh, it's very safe. Oh, we've been prescribing it for decades. Never occurred to them that the good side effect of metformin, which is weight loss, which is stunning, by the way, never occurred to them that you could just use it off-label and be like, okay, well, if you people come for weight loss, we're going to prescribe metformin off-label. Metformin is a diabetes drug, but it has tremendous benefits for weight loss. Anyways, and that's true for a lot of things. And then we have peptides coming. Now, peptides, there's a regulatory battle with peptide because peptides are technically discovered, right? Peptides already exist. Peptides is part of the field of proteomics, right? So a peptide is just a strand of amino acid. So they already exist in nature. So it's very, very, very tough to patent them. So it's like, is it the FDA that uses peptides? Like, who the peptides are? So peptides are discovered. Is it the FDA that regulates peptides, or is it is a peptide a supplement? You know, collagen peptides, for example, that's a supplement. So there's this regulatory battle around peptide. It'd be nice to get clarity on peptides. But of course, the GLP-1s, right? So the glucagon-like peptides, type 1, GLP-1, these peptides are all the rage now. Why? Because drug companies found a way to modify the strand of amino acid ever so slightly so that you could patent it. And so that's essentially what it was. They found this peptide, and they're like, okay, that's why it's called L. That's why it's a glucagon-like peptide, right? The L in GLP stands for, okay, well, it's something that exists in nature. We tweaked it a little bit, we modified it a little bit, and now we can patent it, and now we can sell it for a fortune. So that's also the story. That's also the story of peptides. So this is a much bigger story. If Hims gets into peptide, another revolution in healthcare could be happening before our eyes. And this company, Hims, is at the forefront of that. And so I yet have to see how Amazon's going to handle peptides, right? So anyways, and then turnover. FUD number 5 is turnover. The turnover is very high. Okay, give me a break. First of all, the turnover is not very high. Some people joined, some people quit, right? So people focus on their VP of marketing or something, going elsewhere or whatever. Deirdre's still there, and she does a great job, and she's product, right? So she developed the new product, the new labs product, does very, very well. So okay, so you win some, you lose some. To me, this is not a problem. To me, San Francisco is a vibrant job market. Okay. Clearly, people quit because they found a job elsewhere, right? Think about that. Okay, you have a job. What's your reason for finding a new job often, right? Is it really that you don't like your job, or is it that you want better pay? Right? Most people find new jobs because they want to have better pay. Or maybe you want to find a new job not necessarily because you don't believe in the company, but maybe you want to find a new job because, I don't know, you moved on the other side of town. There's all sorts of there's all sorts of reasons for turnover. Just like there are all sorts of reasons for an insider selling the stock. And so that's not necessarily a bad thing. It's just the way of business life. That's just how business life works. So to me, this is not a signal, and this is not a signal. And so this FUD does not scare me at all, to say the least. If Q4 comes out, who knows how the market's going to react to Q4, but if it drops after Q4, unless I see like very big red flags in the thesis, like, oh, we decided to stop labs, oh, we decided to stop peptides, oh, we decided to accept insurance companies. Like if I were to hear that in the call in Q4, then I'd be worried. But as long as I keep hearing the same thing, executing the vision, the grand vision, I am not worried at all. If they start sounding like TradFi, I'll be worried. But anyways, so I love Hims very much. It's a great stock. Sorry, the video is probably long. I tend to ramble whenever I talk about Hims. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I am hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.